Friends, welcome to my notes. Today, we will try to understand what banking system is. A bank is a financial institution which is licensed to accept checking and saving deposits, make loans and facilitate transactions. Bank is a financial institution which acts as a bridge between savers and borrowers, where bank delivers profit from the cost of servicing deposits for savers and through interest charges to borrowers. Simplifying flow of money between savers and borrowers is one of the primary goals of a banking system. For saving money into a bank, banks generally offers two types of services, namely savings accounts and checking accounts. In checking accounts, deposits are stored for limited time and funds used for regular uses like paying bills and such. Banks provide very little interest on these accounts. On the other hand, saving accounts are used for long-term saving of money or deposits and generally have more interest than checking accounts. Using these deposits as capital, banks lend money to borrowers from which it earns interests. These interest rates are always higher than savers' received interest rates. This is the earning from which banks earn its income and savers receive interests. Various banks offers various kinds of lending schemes spanning various durations. It can be business loans, home loans, car loans, student loans, credit cards, and so on. It can be said that interests are the core working mechanism for banking system. There are several types of banks to provide various specific purposes, namely retail banks, commercial banks, investment banks, central banks, etc. Retail banks are the most common banks in a country. These banks offer services to general public. Services are generally basic banking services useful for day-to-day use to target larger portion of the country. These services may include savings account, ATM card, credit card, debit card, recurring or fixed deposit accounts, personal loans, mortgage, checkbooks, and so on. These banks are essential for our day-to-day financial activities. On the other hand, investment banks target businesses as their target users, providing businesses with services like credit services, fund management, and others. Investment banks help companies with raising capitals through stocks and bonds and providing advisory services for business decisions and others. For example, if a startup wants to raise funds or wants to go to share market, it generally utilizes investment bank services to connect to investors following all complex regulatory processes. Finally, in all countries there are central banks. Central banks does not involve in retail banking activities. Rather, a central bank oversees money supply and country's monetary policies and regulatory body for all commercial banks. Central banks also act as a last resort for banks when any financial crisis happens. Central banks actively monitors inflation and tries to stabilize the economy by adjusting interest rates and imposing monetary regulations. In recent days, we have various types of banks focusing on specific needs and specializing towards these needs in greater degree. Each of the banks and their services provides vital role in the financial system for the economic growth and stability. One of the primary benefits of banking system is security. When deposits are saved in a bank, savers assumes their deposits to be stored securely and reliably in the bank. In some countries, government agencies also ensures deposits to be protected in case of bank failures. Banks also implement secure mechanisms for fund transfers by employing encryptions, fraud detections to safeguard financial information and transactions. While employing secure mechanisms, banking system also simplifies and streamlines financial transactions. Banks provide various transaction methods like checks, debit cards, credit cards, electronic transfers, and others like mobile or online banking. This ease of fund transfer encourages spending and investments and ensures economic growth. Providing financial backing is another core aspect of banking system. Banks provide essential credits to individuals and businesses for various productive purposes. While this access means increase in banks' earning through interests, it also enables borrowers to achieve their activities through use of borrowed credit and stimulates economic activity. Banks also promote financial literacy by educating customers about their services and promotions and financial management, which leads to better financial decision making and long-term financial stability. While banking system plays a crucial role in a country's economy, it is not without its flaws. One major concern of banking system is that not everyone has access to it. Lower income people or people from rural areas lack access to banking system either because they don't have any branch nearby or cannot afford bank charges, or sometimes direct discrimination imposed by nearby banks and regulations. Many banks impose various dubious or hidden charges upon their customers, which reduces trustworthiness from people. While interest rates are the driving force of a bank, unfair or very high interest rates from borrowers lead to financial burden for borrowers and businesses, making it challenging to manage debts and achieve production goals. Sometimes banks take unreliable financial risks, which put savers' deposits at risk. And when those risks do fail, it generally have widespread economical effect and put entire economy at risk. While regulations are put to reduce these kinds of risk-taking, not always are they effective. Over time, we have seen such mismanagement with greater social impacts which devastated many countries' economical state. While banks try to implement secure mechanisms for fund transferring, not always they are effective. There have many times when either the implemented security failed or been social engineered to transfer funds to unintended receivers. We are standing in a time when digital first is the way forward for banking system. It makes banking system dynamic, widespread, and far reachable. Bank systems like mobile banking is making it easier for people to access banking services, which is reducing the accessibility issue of banking sector. With digitalization, security has gotten much more important than ever before. Banks need to implement and enforce use of much more secure and stronger security mechanism for banking activity to protect finances. With emerging digital and mobile banking, regulatory actions must be adapted to these new changes and ensure protection of people's money. Regulations should focus on data privacy, cybersecurity, and consumer protection to keep up with the technological progression. From managing personal finances to managing business finances, banking system is involved in every aspect of our financial life in one way or another way. Banking system empowers us with better community, better financial management, provides us financial backing for our businesses, and so on. It also burdens us with high interest rates, risks of losing property due to debt, and potential risks of losing all savings due to lack of proper security measurement. The effects of banking system extend beyond financial sector and reaches to our social life. Banking system is a vital part of our economical and social life. Understanding banking system is going to make everyone financially literate and make better financial decisions. And a secure and social-driven banking system is going to empower everyone for a better future. Please subscribe to my channel for more videos like this one. Like the video if you have liked it and let me know your thoughts about the video in the comment section. I am Maruf and it has been my note. Thank you for being with me. See you in the next one.